Rob Stone, 2 damn phones, Babylons can't crack the code.
Welcome to B-MoneyTrading. So this is Q&A Wednesday, and basically, if you don't know what it is, I either read questions on my email from subscribers or people that view videos have questions, or I answer questions on the comment section, or I refer to Facebook trading groups on questions that people have posted and my response. And as you can see from the title of this video, 2 birds with 1 stone. Basically, I'm going to kill 2 birds with 1 stone, and that is I'm going to answer 2 questions with the same answer. As we get into that, before we get into that, I'm going to just show you a quick update on my account. So I ended the day up a little over 4%, $92.76. I added to one of my positions, which was Nvidia. I bought 1 share. You see I have 4 shares. Pull this up really quick just so you can confirm. I added 1 share today, 12 hours ago, $1.44 or $144.75. And so that's where we're at with that. So, and even though I'm up for the day, I am down for the week. So I won that battle, but I lost the war for the week. So past week, down a little over 5%, $128.99. I will be adding probably 200 this Friday. It's going to be a half day this Friday because of the holiday. So market here, Central Standard Time, will close at noon, open at 8:30 and close at noon. And then we'll be back at it Monday. So moving on, Q&A Wednesday, the 2 birds with 1 stone. I'm just going to pull that up for the background so you can see what the SPY has done today. And there we go. So here we go. This person asks, how do you stop looking at your investments every 5 seconds? Question number 1, sorry, allergies. And then question number 2 is, how do you stop from selling too soon? Which I'm assuming he's talking about taking profits too soon, not holding on longer. And basically, I responded to that question, how do you stop from selling too soon? And I didn't respond to this other one though. But anyhow, the answer is by continuing to do what you're trying to stop doing. And as crazy as that sounds, I'm just telling you from my experience, no professional, no financial advisor by any means, but from my own experience, how you stop doing that is by continuing to do it, because apparently you recognize that it's a problem. And so you lack the discipline and maturity to stop doing it. And so as you keep doing it, realizing it's a problem and you get burned, eventually you'll stop doing it. You'll get tired of it. You'll, the more that you continue to check your account and everything, then you just get tired of doing that. So either you'll start positioning better, not taking on so much risk to where you feel the need to check your account every 5 seconds, or you'll stop selling too soon because you realize that's an issue, and that maybe you'll start scaling out instead. But really, I think all these, because I had these issues too when I was new to trading, and what really happened was just I continued to do it until I got sick and tired of doing it. And once I got tired of doing it, I stopped doing it. I made a conscious decision to say, you know what, like, if I check my account right now, I already have my trading plan and everything's in place. So if I check it right now, what's the purpose? It's not going to change the outcome, whether it says I'm up or down. I already have my trading plan, so I'll just check it whenever it's more convenient and I'm not driving to work, or busy at work doing something that I need to really be focusing on. And so basically just keep doing it. Eventually you'll get tired of doing it and you'll stop. And it's just that simple. I mean, there's no certain thing to do to get rid of a bad habit, other than to either replace it with a good habit or just stop doing it altogether. And unfortunately in this scenario, self-discipline is something that can only be self-taught. Meaning self-discipline is basically that in itself, disciplining yourself, having enough discipline that you impose on yourself not to do that action. So anyhow, we're not getting into living quality living skills or whatever, but that was really, there was another thing that I was reading on too that I found was interesting, that I thought that y'all may find interesting. Another person had posted on here about thinking about selling. I keep hearing talk about crashes, market crashing. Please tell me I'm wrong. Like, basically, these want people to confirm that they shouldn't sell. And this is gonna be a short Q&A Wednesday. So with that question, this guy looking for people to confirm that he's right by holding on to whatever he's holding on to, and it showed the picture of what he's holding on to in his chart and how much he was down. And all I can tell you, to a good summary, is that keep in mind statistics, and you'll hear it all the time, especially new and throughout your trading career, is that only 10% of traders succeed. The other 90% end up failing, don't become consistently profitable, or they may have a good year and then the first month of the next year they end up losing all of what they made that last year, and they just can't take it, the kind of emotional strain, and they get out. They're tired of it, they've had enough. But either way, that 90% of the people are not successful. And so if you know that a majority of the people are not successful, then why would you listen to a majority of the people on social media? And that's what I've never understood, why people take advice or look for advice on social media. If and this is, speaking as that these statistics, then why would you take a majority of what people are saying on social media? Like, I'm sure a majority of people are selling right now, panic selling, and basically what I'm doing is I'm buying off of their panic selling. Whenever you're selling something, somebody else is buying it, so apparently somebody else has a game plan or has waited for you to get to this point of panic selling to take advantage of the opportunity and to exploit it by buying and accumulating and adding on for the future. And so basically that's basically what my trading plan is right now, is I'm trying to exploit everybody's panic sell that the market's going to crash. And you may say, well, how come you're so confident that it's not going to crash? It's not that it's not a possibility, but according to my experience and what the way I think, that it is always a possibility, but the probability is not likely. And you may be saying, well, why? Because after the housing market crashed, you saw them do the QE3, I think that was when they started QE1. And if you wonder what that stands for, it's quantitative easing. Basically, the Fed bailed out the big banks. The government borrowed money from the Federal Reserve and gave it to the big banks to bail them out, so that the whole overall economy, really even the world economy, didn't collapse and implode, and we go back to the 1929 era of the Great Depression. And so that's how I'm so confident that if they wouldn't let it happen then why the hell would they let it happen now? You know what I'm saying? And as much as they probably should let it happen so that this can all correct itself and get all straightened out once and for all, because my thoughts on them doing that was really what has created the type of economy and market that we have today, because it was not, it was paper. It's all based on, it's not gold backed, currency. And anyhow, that's a totally different topic. If you ever study our economy and the monetary system, and how it all works and how it all came about with the Federal Reserve and the banks and credit and interest rates, and how all this entwines in the government, then I would suggest learn about all that. If you're going to be in the stock market investing, then you should probably know the history of money and how the whole system works, how credit works and debt, and how it's just all entwined together. Because once you learn what it is, you'll realize it's a big scam. It really is a big scam. But anyhow, moving on. So my thoughts are that have a trading plan, stick to it. If you're watching social media or whatever, and you see that it's having you doubt yourself, then you should probably just stop watching it. Truth be told, sometimes that's what I do. I will purposely not get on and watch some YouTube vlog, that trades, some trader vlog, or some, news, or get on Facebook on certain trade groups, because I know what's going to be on there, and I don't need that kind of noise in my head. So the best, from my experience, the best thing you can do is cut the noise out, the white noise, all this it's gonna crash, whatever. You came in with a game plan, stick to it. If it's not playing how you would, then part of your game plan is how you're gonna exit and get out and risk your, manage your risk, and how you're gonna mitigate it. And so basically that's what you do, and you don't let other people sway your decisions. It's just simple as that. I would like to go into more, but I don't want this video being too long. But Jesse Livermore, and I refer to him a lot, he even talks about it. If you ever read or listen to the audiobook of Reminiscence of a Stock Operator, he talks about it, about taking tips from people. And as far as on a stock, they get a tip from so-and-so that so-and-so is buying all this, say you get a tip that Warren Buffett is buying, all these shares of JP Morgan that he ended up doing. Well, now you need to wait. So you end up buying it, right? And it goes up. Well, now you wait for the tip of when to get out, So basically you're always relying on somebody else. And that's why I never understand why people try to shadow trade. Basically follow somebody that either is a successful trader or is basically running a business, and even though they're not successful trading, they alter stuff and make it appear that they are. But either way, even if they are successful, they try to shadow trade them and take the trades that they do, and it doesn't work out that way. There's lagging on the internet, so you're not getting the same entry as they did, and you're not getting the same exit as they did as well. Their account is probably a lot bigger than yours, so they can take a big loss better than you can having a small account. And there's just a lot of different variables that makes shadow trading not practical, put it that way. And then on top of that, when you got into the stock market, I would hope to have learned how to trade, not to learn how to follow somebody, but learn how to trade. I'm all for getting in chat rooms and stuff like that, and looking at other people and how they trade it and learning from them. But I'm not. I don't condone shadow trading. You need to learn how to manage your own money, because you're gonna be the one that's gonna suffer when you take a loss, and you're gonna be the one that makes the money when you succeed. So, it's all about learning and doing it yourself. If you want to shadow trade, you might as well just go find a hedge fund, or put your money with some big brokerage that's going to manage it for you and take a certain fee for managing it. So I don't get why you would want to shadow trade. If you're going to shadow trade, you might as well just give it to a hedge fund or a big broker and let them manage it. Pay somebody else to manage it. So, with that said, this wraps up Q&A Wednesday, and I'm going to start looking to start editing my videos and hopefully make them better quality and shorter, more compressed, with just the information you need to know. And just looking right now, start looking for a good editor, system to use that's going to put out good quality stuff that's easy to use, with someone with very little experience editing and streaming. That's what I'm learning now, and that's really where I'm at. Look at doing that, and hopefully everyone has a good Thanksgiving. Thanks for watching Q&A Wednesday. I look forward to next Wednesday. Q&A Wednesday is always fun, and I look forward to them. So trade safe, manage your risk, and have a plan. Talk to y'all later, and see ya.